Hello traders, Gary Wagner here just after 10:30 in Honolulu, 4:30 in New York on Tuesday, the 9th day of September 2014, and this is the daily report for gold and silver. After trading lower for most of the morning, down $4 or $5 on the day, we do have gold recouping, currently trading unchanged to about up 50 or 60 cents. Current print on the screen, 1256.30. It has had a high today of 1257.50 and a low of 1247.60. Silver also showing signs today in which we have seen the market come up off the lows, currently trading up about 3 cents. It is above $19 per ounce, and that is important. The low today has been 1886, the high 1912. More on silver in a little bit. Traders, you might have noticed a different size on today's video. We have moved from 720 to 1080 HT. Gives us more real estate, and of course, more real estate allows us to put multiple charts on a page. And so over the next couple of days, you'll see that this format is a lot more robust than the 720 we previously used. Interesting day developing in the market. As you can see from the single candlestick, it is almost a pure doji at this point, 1255.33. You can see that we are now unchanged on the day. Also, the fact that we have this entire doji gapped below all of the real bodies and most of this tail of yesterday's trading creates a basic candlestick pattern that could turn into what's called an abandoned baby. We'll talk about that in a little bit. But the key to me right now is the fact that you have the equities under pressure, the dollar a little bit lower, and you had continued pressure in the gold market during that time. So as you can see, we have brought in the Standard & Poor's 500. This, of course, is the cash contract. No doubt, this is 2010, and we've had some real resistance in this area. And the real question is, we've seen tops that come just prior to a correction such as here. We've also seen tops in the market that have really occurred prior to the market moving up. What that tells us is that we are absolutely in a consolidation phase. Now, the fact that we're in record territory tells me we could possibly see some sort of a retracement in the Standard & Poor's. And of course, we understand that that could have a bullish effect on gold. Of course, the other market that we're looking at very closely to get some indication or sense as to what we'll see this market do in the near future is the dollar index. I've put up our dollar index chart, and once again we have a slightly down day, but we did get that on other occasions such as here and here, in which the dollar retraced slightly only to see it really take off and pick up steam on the following day. Now, in terms of my overall perspective and take on the market right now, as I talked about over the last few days, the key area right now in terms of critical support has to be this low here, roughly at 1240. Because when we look at the basic picture of this market, starting with the low at 1180, this is the second, of course, of a double bottom, then to 1240, we're now at 1255. We're still looking at a series of higher lows as we look at this market. And that means that there is the potential, although the probability keeps diminishing of that potential, that we could in fact find some sort of bottom in this market. The other factor, of course, that we have been really noticing is that we've also had this series of lower highs. And they're absolutely predominant within the market as we look at this range continuing to narrow. And of course, more importantly than that is the fact that when we take a look at our long-standing support line, which really comes in by creating a trend line from these last two lows at 1180 and then at 1240, we absolutely had a breakdown below the particular support line, and that's where that pressure comes in. Of course, we then broke below that 61% retracement, that retracement being a retracement from this large $200 rally. So what am I looking at in terms of our short-term look at the market? Well, this is absolutely a critical area, roughly at 1240, and my sense is that we'll probably go and test this particular area. Now, if we break below this particular point, this low right here, which is at 1240, and then our last really final area is 1230. My sense is that we'll probably make a play for these lows down at 1180. So I think that we could see some more downside pressure, but at the same time, we do have the equities markets now actually tracking under some pretty significant pressure as we moved into the close for the day. And then lastly, in terms of gold analysis today, I've pulled up our 2-day chart. This does have our Andrews pitchfork, and we're absolutely still below our zero prong. So we have broken to the downside, and we continue to trade under pressure. So I am looking for a continuation of lower pricing. Now, as far as silver goes, a couple of things are noteworthy today. First of all, we have been able to hold really above this $19 point, and $19 has proved to be fairly significant support in the past. I draw your attention to a couple of different areas. Right in here, of course, this line is not completely straight, as well as right in here, in which we saw that price point be supportive. The real question is, will we see it occur again in terms of some type of support? Because for the better part of the last couple of years, except for one small time right in here, we have been able to, or silver has been able to, I should say, effectively trade above 19. The other thing is the commodity index that we have here, the CCI. You can see that we did bounce off of this negative 200. It has shown us points in which we have truly rallied in the market, such as right here, and given us a good call right here. But we've also seen significant points in which we have seen this market bounce off of this particular negative 2,000, only to continue its defined path to lower pricing. So we take that with a pretty large grain of salt. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.